Welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Hezbollah has rejected being part of the US-Iran accommodation, and Israel is continuing to attack it in Beirut in southern Lebanon. Despite this, markets still hope that a ceasefire can be agreed and the Strait of Hormuz opened. They are pricing it well, but it is still shut today. Elsewhere, and in the US, there were 97,000 announced job cuts in May, the most since January and the highest May since 2020, and the pandemic effect, and prior to that, the highest since this tracking began in 1999. Most of the current layoffs are in the tech industry and due to AI displacement. And markets await the May non-farm payrolls report in the US tomorrow, and the expectation is for a modest 85,000 net jobs gain. This is despite the private ADP report indicating a higher level. US initial jobless claims were little changed last week at 188,000, although seasonal factors would have expected a solid 10,000 fall from that level. There are now 1.64 million people on these benefits, lower than a year ago. And staying in the US, they've found a flesh-eating screwworm in their Texas cattle herd, another reason their beef industry is unlikely to be able to sustain its output. And the EU said its retail sales volume growth was weak in April, up 0.9%, up 1% in the euro area from a year ago. From the prior month, these volumes dipped, but this dip doesn't actually interrupt the rising trend in place since late 2023. And we're ending the week with the price of some key commodities like copper, tin and aluminium holding just off their recent peaks. China is facing broad pushback at the level of subsidising it gives its steel industry. The OECD singled them out for criticism, urging coordinated action against them to save capability around the world. A new round of defensive trade barriers is likely to follow. Chinese overcapacity is enabled by these subsidies, and it drives down prices everywhere as Chinese companies rush to quit stocks they can't sell at home. The geopolitical toll on the logistics industry is starting to bite. Global container freight rates surged 23% this week from the prior week to be basically level with year-ago levels, which were unusually high due to the Houthi attacks in the Red Sea. Most of this is due to the hikes in rates for outbound China trade routes. Meanwhile, bulk cargo freight rates eased back a minor 3% after their recent peak last week. In Australia, AI is being put to use driving legal claims by amateurs. Courts are being flooded with AI-written plaintiff claims, especially for personal injury, unfair dismissal, rent disputes, and pain and suffering claims. New powers have been rushed through Canberra Parliament to try and stem the flood. The US Treasury 10-year yield is now just on 4.47%, down 2 basis points from yesterday. And the price of gold will start today up $41 at $4,478 an ounce. Silver's up 50 cents at just on $74 an ounce. And oil prices are down $4 at $92 a barrel in the US, while the international Brent price is now just over $94.50 a barrel and down $3.50. Hormuz remains shut, however, despite the pricing optimism. And the Kiwi dollar is firmer from yesterday at this time at 58.8 US cents, up 20 basis points. Against the Aussie, we're up 10 basis points at 82.3 Australian cents. Against the euro, we're unchanged, though, at just under 50.6 euro cents. That all means our trade-weighted index starts today at just under 62.3, which is up 10 basis points from yesterday. And the Bitcoin price starts today at just on $63,013, down another 4.3% from yesterday and still falling. Volatility over the past 24 hours has been high, just on the plus or minus 3.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again on Monday.